Welcome back to the GMS Weekly Podcast, where we break down the developments shaping the global ship recycling markets. I'm Greta.
And I'm Henning. This week, the headline is progress, but progress with plenty of conditions attached.
Exactly. Iran and Oman have agreed to a temporary shipping corridor through the Strait of Hormuz. But this is important. It is not a full reopening.
And the fine print may matter more than the headline. Iran's parliament is considering a transit framework that could restrict U.S. and Israeli vessels, require compensation from hostile states, and impose penalties of up to 20% of cargo value for violations.
So we have a corridor, but certainly not normal navigation. By Friday, explosions were again being reported around the strait, while Houthi forces claimed fresh attacks on Saudi targets.
Which explains oil's rather a mixed week. Brent initially fell as diplomacy improved and U.S. inventories rose before geopolitical risk came back into the price. It ultimately closed around $83 a barrel, down roughly 5% for the week and about 15% from its July peak.
But for ship recycling, Henning, I think freight may actually be the more important number this week.
I agree. The Baltic Dry Index pushed above 3,000 for the first time since early June, while Capesizes surged above 5,000. Capesize earnings are now more than 20% higher on the week.
And that creates the familiar recycling problem. When older vessels can still earn attractive money trading, owners have less incentive to sell them for recycling.
Precisely. The recycling yards may be ready, buyers may be hungry, but a strong freight market keeps candidates employed.
Now, turning to the recycling destinations, Bangladesh remains at the top of the pricing table. The previous tide window cleared the flood-era backlog, and Anchorage is already rebuilding ahead of the August 12th to 15th window.
Buyer confidence there remains firm as well, particularly for mid-sized tonnage. Local steel softened slightly to around 64,000 taka per ton, but vessel indications held steady. So the small movement in steel hasn't really shaken recycling appetite.
India is perhaps more interesting from a sentiment perspective. Alang buyers have watched several candidates head to Chattogram and Gadani, and their response has been to become more aggressive themselves.
Which is significant. Indian plate strengthened to about 39,200 rupees per ton, while the stronger rupee pushed the dollar equivalent above $411. India still trails Bangladesh and Pakistan on vessel pricing, but appetite is clearly returning.
And structurally, India retains some important advantages. More than 115 valid statements of compliance, its ability to handle certain dark fleet histories, and the pending proposal to add 2 Alang yards to the EU list.
Pakistan, meanwhile, finally converted strong pricing into business. Gadani has secured several recent candidates after spending weeks with firm bids but very little tonnage.
And there is a fundamental reason for that appetite. With Iranian steel imports absent, local mills are leaning more heavily on domestic recycling supply. Plate remains around 200,000 rupees per ton, keeping Pakistan highly competitive.
Pakistan also delivered one of the week's important macro numbers. July inflation eased from 11.1% to 9.2%, returning to single digits, although prices still rose month on month. The central bank kept rates at 11.5%.
Turkey also saw inflation ease to 31.75% officially, although the independent estimate remains much higher, at just over 50%.
And despite that improvement, the lira reached another record low. Aliaga recycling indications remain broadly unchanged and well below the subcontinent. Turkey's proposition continues to be compliance and specialist tonnage rather than outright price.
So, Henning, what's the big picture this week?
I'd say the physical recycling market is healthier than it has been for some time. Bangladesh is active, Pakistan is winning deals, and India is bidding harder. The problem is that freight has strengthened at exactly the same time.
I'd add one more thing. Hormuz may now have a corridor, but owners shouldn't mistake that for the return of normal trading conditions. Navigation has improved. Geopolitical and compliance risks haven't disappeared.
Agreed. So the 4 themes to remember this week: corridor opens, tolls drafted, freight surges, inflation eases.
And in the recycling markets, competition for available tonnage is clearly returning. It's even as strong freight earnings compete to keep those vessels trading.
That's all for this week's GMS Weekly Podcast.
Thanks for listening. We'll be back next week with the latest developments from across the global ship recycling markets.
Until then, stay safe and stay informed.